Welcome back to the exciting insurance show, episode 5. We got some new office furniture because we raided the office upstairs. They're no longer here. So I did all the moving for these old guys. But today we're here with Paul Walsh and we're talking all about workers' comp. All right, let's get right into this, Paul Walsh. How do audits work?
On workers' comp. So every year, we're given an estimate when we're getting a rate on workers' comp. And of course, the carriers want to know exact payroll at the end of the given year because rate is directly associated with how many dollars are being paid out. So you have to give tax documents showing exactly what payroll was. And we've had cases where people have gotten refunds because they overestimated, or unfortunately, right now, which is actually, I guess, a good thing for a lot of these companies, they're paying out more. That means they're making more money or hiring people. So they get an audit and they, estimated payroll didn't hit the mark, and now they're paying $80,000 more, or whatever the number is. So they're going to get hit with a little bill that they're going to have
Yeah,
to pay.
so to break that down into layman's terms, like say you estimated 100,000 for your payroll. Then you had a really good year. You had to hire another guy. Now the payroll's
Right.
200,000 at the end of the year.
Yeah. So
Basically, you're paying double at that audit.
you're going to pay double. And unfortunately, we've had, one person that got hit for, 500,000 in audits based
That,
on
that, that was a different
estimates.
issue.
That's a huge issue, based on for workers' comp, because of another scenario where you could get dinged is you're paying out money, but you don't get certificates of insurance, right? So at the audit, they just see that you're paying out, X, and that can be wiped clean if you get a certificate of insurance showing that the money that was paid out
It
was
was a
for a
subcontractor who had their
subcontractor.
own workers' comp policy.
Exactly. But if you don't have proof that they have that workers' comp
It's going to
policy,
roll up to you.
this automatically rolls up to you, and you're going to get hit for that. But that's why we require, our contractors, make sure you get those certificates of insurance.
Okay. So talk to me about like payroll companies and ADP and why that's a big pull, at least in the contractor market that we see.
Well, a lot of people like to do the pay-as-you-go program,
Every
right?
day you come in with your 6 cents, and at the end of the week you get your sandwich.
Why you gotta be an asshole?
What am I, fucking sandwich welfare? I think you should establish a good line of credit.
Right. The pay-as-you-go makes sure at the end of the year that, when the audit happens, it's going to be really minimum either way, because pay-as-you-go, every month you're paying the exact amount based on your payroll, which is great. It's very, very simple. And with ADP or Paychecks, they run programs like that. But you're tied into their carrier, right? Whoever they're using at the time. So there are other ways to do it, because obviously you want to have access to more carriers at open enrollment, and at benefit decision time, um, for workers' comp. So you want to make sure you go out to the market and shop everything. Well, the challenge is that not every company is tied into an ADP or Paychecks, but they do pay as you go platforms where you have to upload your payroll every month, which most of the time works great unless you miss an upload, right? But
Yeah, so that's all I also want to get into like those third party, like there's carriers like the Hartford that offer pays you go and Selective and all the major ones,
Mhm.
but that doesn't mean that you're not necessarily going to get hit at the audit.
Right. I mean, you have to, because it's up to you, right? You're not relying on a payroll company to automatically, feed that information into the system. So you have to upload it, once a month,
Yeah,
which, most companies we're not having an issue with,
yeah,
you
because
know.
you just take your payroll number that month, put it into
Right.
that system. There should be
Right.
no change. You should be good.
Right. You should be good. And that does minimize, any big dings at audit. That's for sure.
Yeah. Um, okay, so the other thing that is a big factor in the workers' comp calculation is class code,
Correct.
which basically meaning like some businesses are more dangerous than others, which is why they're rated differently. So,
Correct.
like, I took the class code for a general contractor in Connecticut. It's anywhere from like $17 to $27, whereas an electrician is like $2.60.
Correct.
Could you just like expand on that?
Well, I mean, just look at job description, right? So, because obviously workers' comp is on the job, as everybody knows. And, what are the odds if you're in a warehouse up and down ladders, on forklifts racing around versus an accountant in his office, doing paperwork, right? So,
Yeah.
and there's codes that, I won't bore you with, but, and a company could have multiple codes, right? So you could have a company that has, 3 different codes within the same organization based on warehouse, office, sales guys on the road, whatever the case may be. So, but yeah, and the rates are all over the place based on those codes.
Yeah, and so the calculation is payroll divided by 100 times premium index rate, which is the rate that we were just talking
Right.
about. So that's layman's terms is where it should around be the premium of what you're paying. Not going to be on the dot, but and then the last thing is just mod rate. And what's mod rate?
Mod rate is, basically it's your claim history over the past, so many years. So, I used to know the mod calculation exactly, and I probably should, but you want to be close to that one as possible because basically it's ranking. Say you're a concrete contractor, is going to. So what it does is it takes all concrete contractors, and your mod rate is going against just other concrete contractors. So if you're at one, that means you're right on target of where your loss ratio should be. If you're over that one, if you're 1.87, well, you're 0.87 higher, which is significant than where you should be according to the classification for your company. That's why for any company that's going to be under a one mod rate, you're going to get significantly better rates than say your competition.
Yeah. All right. And closing thoughts to any business owner, small business owner about their comp.
Just do trainings with the guys.
Son, Bud Liquor, our prices have never been lower.
Okay, stop it.
He
That is totally inappropriate.
The crew, everybody in the office, just make sure they know the risk and the costs associated with it, and have those carriers love it if you show them that you're doing, monthly, quarterly training. If you're on a job site, you're having safety meetings, those type of things. That definitely helps in the long run.
Okay. Thank you guys for watching this long. If you had, please like and subscribe. It really helps the channel. Let me know what your favorite cameo is, and that is all. BRBG Insurance out.